Hello, my name is Stacey Mankoff. I am the founder of the After the Bell events. And as you know, they're on pause right now due to the current situation. So, what we have is a wonderful opportunity to have one on one interviews with experts in the industry. And today I'm delighted to have Ben Sebley. Now, Ben started his career off as a military officer and then moved into banking into the emerging markets as an equity trader, where he had a significant amount of experience before he moved into the digital assets world in 2018. Currently, Ben is the Chief Growth Officer at BCB Group, which is Europe's leading provider of business accounts and trading services for the digital asset economy. So, first off, I'd like to welcome Ben.
Thanks very much for having me.
You're very welcome. Now, first off, I would like to have you give us sort of an overview of where are we now with crypto firms' ability to obtain traditional or as similar to it can be banking procedures.
Sure. In some ways, we're actually a little bit further on than a few years ago when the market started, but in many ways, we're actually not. Um, and I wouldn't be exaggerating when I said it's probably one of the biggest, if not the biggest challenge for most either established crypto firms or especially for more crypto-facing startups.
Mhm.
Um, So really, you've got the world split geographically, and what we've had is sort of the US has trailblazed and led the way for normal US banking to an extent, but
Mhm.
they've really been focused on sort of onshore US operations.
Mhm.
Come slightly east, and you've got the kind of hodgepodge of Europe, really. So Europe is a big mix of sleepy private banks and sort of e-money institutions, all having a go and trying their best, but not really doing particularly well. And
Mhm.
then go out to the Far East, and you've got some very big banks who will bank you, but from what I can tell, you really need to know someone there or have an existing relationship with those banks in order to get banking.
Mhm.
So in short, it's a mess. And really the only kind of theme globally that kind of is persistent across the board is the fact that the big banks have either stayed away, like they've just stayed away
Mhm.
unilaterally, or they very quietly dipped their toe in and got burnt and then kind of withdrawn back into the shadows. So that's really left us with this kind of impossible problem that so many people are trying to solve.
Well, you said that they got burned a little bit, but why also is there such a big difficulty in regards to this? Why can't it just be considered, another currency? And why is it so hard?
Yeah, I mean, it's a good question. I mean, I think it's probably a couple of things. So maybe the first thing is just a compliance issue. So they have designated cryptocurrency in the ultra high risk bracket. So by virtue of that, it means that there's an extra compliance burden at these banks, um, and they've got to go through extra kind of due diligence on everything.
Hmm.
What's more is the fact they struggle to find out kind of who's a big player, who's not. And that feeds into the second point, which is there's no understanding of crypto. So they don't understand, how crypto companies do compliance. So it's
Hmm.
very hard for them to get an acceptance as to this is a good company or this is a bad company.
Hmm.
So what we saw was very quietly these banks would try, they'd dip their toe in, but because they didn't have the understanding, they'd be at a loss and they wouldn't be able to differentiate, say, a Coinbase from a
Hmm.
crypto startup, run by a couple of people, not necessarily doing the right things. And as such, they just basically went, look, the juice isn't worth the squeeze here. We're going to take a step back, wait for the industry to mature. Until then, it's in the same bracket as sort of gambling and ultra high risk things as well.
Hmm. Well, I don't think it helps when, you have people wanting ransom in Bitcoin and things like that. So
Yeah, it's never going to
people,
help.
and,
Yeah.
and very strong with AML. But do you see any sort of shift happening with these banks, or do crypto companies really have to look for alternatives?
I don't think there's been a shift in a positive direction, actually. I
Hmm.
think, you've had the established players, say in the US, you've got the Silvergates and Signatures, who are really monopolizing the market because everyone else has just gone, no, we don't understand it. We're not coming in. And really, it's a shift backwards because a couple of years ago, a few banks would try, across continental Europe, across maybe America, they would quietly try to understand crypto. And now they really have just shut down the doors. So it's been a case where you've had to let specialists establish themselves in the market. And the specialists are now really taking all the market share. But they don't have access to the same kind of huge economies that a bank has access to. So crypto firms' growth as a result is stifled. And it's such a shame because there's so many things in the industry that actually would improve sort of traditional finance and are improving traditional finance, just not many people know about them.
So, is you spoke about a bit about some differences between the US and Europe and all of that. If you were a crypto firm, start, coming out and wanting to look at this, what sort of criteria are you looking for when you want to, to do this? What firms are you looking to? And you said there were some specialists, like any names that you can give us, and, the more information, because if I were a firm and I'm like, I want to be able to, to function, what do I need to know? Who should I look for?
Yeah, sure. So the first thing I would do is work out, right, geographically, what area of the world am I operating in? Where am I doing all my business? And as such, which currencies, fiat currencies, do I need to interact in? Because that's the hardest thing. It's, okay, which provider? The provider normally dictates which currencies you can get bank in. So I touched on it before, but the US banks, they only do US dollar. So, if you are a US company servicing US citizens at home or abroad, that's fine. You've got your banking sorted. However, anything else, there's not really anyone. So that's really where we fit in. I don't want to plug us, but, you have the US market fairly monopolized, and we've really kind of come in and we found we've started to basically bank the entire industry for everything else. So we have access to being able to offer kind of 29 different currencies for banking outside of US dollar. And really, we've seen this huge sort of exodus towards us for even huge companies that just struggle to get banking. And these are sort of multi-billion-dollar crypto companies. You'd expect them to be taken seriously, but they're just not. So that's really the kind of opportunity we try to seize upon.
Right.
There's a few other bits and pieces, but not kind of anyone huge or meaningful.
How are you able to do that? Because obviously there are all these challenges, but I'd love for you to explain, what did you have to prove? What did you show that enabled you to be able to show to get 29 different currencies and other places couldn't?
Well, I think we got very lucky because we were the right place, right time. We were already established when that last big major bull run happened in 2017.
Just go back a little bit. Where were you established at the time?
We were established mainland UK, which is where we have our headquarters. So very much European facing, but UK centric. And at the time, there was this clamor amongst regulators globally to understand crypto.
Right.
And UK regulator was no different. So we luckily were based across the road from them. And we managed to we were the first sort of crypto company into the sandbox and regulated here in the UK. So we had this wonderful standing with the regulator who was very open with us, and we were very open with them. And because of that, we were able to become regulated in a way that then meant we realized we could actually offer sort of e-banking to the crypto industry. And because we always set up as, being ultra agile, trying to focus on what the clients need and service that, we were able to sort of build it out. And where we are now, we basically bundled services that the clients are desperate for that they couldn't get anywhere else.
Like what type of services?
Things like, we actually started as a trading desk, access to sort of FX, just foreign currency exchange, access to sort of crypto custody as well, places to park your crypto. Really kind of simple, but there's not a lot of people providing very simple things in crypto. So we've just always tried to keep it ultra simple, and we've been quite lucky so far.
I was just on a call with a number of traditional institutions, and talking about a forecast, and they were talking about digital cryptocurrencies and all of that. And they feel that at some point, if those cryptocurrencies become too threatening to fiat currencies, that governments will shut them down, and that'll be the end of them. What are your thoughts about that?
Well, so crypto, if you think of the sort of decentralized nature of a lot of cryptocurrency,
Mm-hmm.
it's actually a hedge on the banking system because no one controls it. So, countries can.
No one controls the cryptocurrencies, or nobody, or the banking
Well,
we talked about.
so if you look at say Bitcoin, no one
Right.
actually controls it. You have the kind of
Mm-hmm.
miners that sort of do the proof of work. However, countries can close down the ability to sort of trade
Right.
cryptocurrency legally.
Mm-hmm.
However, it will still exist and it's still cross-border fungible, and you can still keep it in your pocket. You can memorize a number and keep your wealth with you as you cross kind of borders. I would say it's now probably too big to fail in some aspects.
Mm-hmm.
Since the last kind of 3 years, we've seen just this steady inflow of venture capital money and of kind of assets to improve the infrastructure, of real high quality people into the industry. It
Mm-hmm.
now feels like brand new type of kind of mini banking.
Mm-hmm.
And sort of we've just hit, before this call, went through 20,000, that sort of massive dollar level, that psychological barrier, without a peep, which is quite nice
Mm-hmm.
because retail have stayed away. They got burnt last time, and now it's sort of serious players only. And a lot of kind of financial institutions are taking it seriously now. Behind closed doors, we're seeing so much interest. We're seeing a lot of newcomers in size, quietly buying, steadily custodying, and now the infrastructure is there to keep it safe, and it's regulated, and it's sort of accepted. And I think, especially with Bitcoin, the whole narrative of digital gold and a hedge against maybe inflation in the banking industry, that really appeals to people, especially in the last few years with sort of the economies across the world as they are, and hedge funds struggling to return, say, over a few percent a year.
Mm-hmm.
It's really interesting now. Bitcoin's outperformed every sort of major indice each
Mm-hmm.
year for the past sort of 5 years, and people have picked up on that.
And then you also have the rise of stable coins as
Mm.
well. What do you feel about that? Do you think that will more grow, or it's been sort of quiet. It was a very hot topic for a while there.
Yeah, stablecoins are fascinating. We think these are the future, and you had many central banks come out and say, look, we're interested in this, or we're actively doing this. We even had the head of the Bank of England come out and say, look, if we actually made a GBP stablecoin, it would be better than real money.
Mm-hmm.
The sort of view is these things need to be regulated.
Right.
The UK is about to issue an update on regulation just for stablecoins. The US has got it very clearly as well. Clearly something that would impact an aspect of control, say in the US, like the Fed has an interest in stablecoins.
Mm-hmm.
They are better. They are being used daily. We see money remittance firms use them every day, billions of dollars going cross-border because they move quicker than money.
Mm-hmm.
We partner with a lot of providers. We're looking into it ourselves, and we really want to be able to just build it into our platform so that you can either send money over normal wires, it takes 2 days and costs X amount, or
Mm-hmm.
it's basically free and it transfers instantly by using a stable coin. And we're not there yet. We're about kind of 3 years away, I think, but we're getting there.
Do you feel, I mean, the way that the digital banking, or that this works, seems so much faster and cheaper than the traditional banking? Um, do you see there will be a shift with traditional banking, a merger with traditional banking? So a firm like yours might be acquired, or become, JP Morgan BCB or something like that. So you have, so we'll, a hybrid kind of, do you understand what I'm saying?
Of course, of course.
Let's do a look down 5 years, 6 years.
Yeah, exactly. Well, we'd insist it would be BCB, JP Morgan, but that's fine.
Well, alphabetically, yes.
Yeah, exactly. These conversations are happening everywhere.
Uh-huh.
People have, so the way that traditional finance got exposure to crypto in the last few years was
Mm-hmm.
via venture cap money.
Mm-hmm.
Now we have sort of entered the stage where the big banks are actively looking at acquisitions in the space
Right.
so that they can improve infrastructure.
Mm-hmm.
Payments is a big, big thing.
Mm-hmm.
One of the first things we realized when we started, offering banking was, how old and rusty these legacy systems are. And it's crazy what we're building this lovely new stuff on top of. How much it costs, how much time payments take to send, and that in turn makes markets inefficient.
Mm-hmm.
And so, yes, I think to answer your question, we will see rapidly, I think over the next couple of years, major acquisitions happen, with a view to improving this legacy infrastructure and sort of combining the benefits that crypto has with traditional finance. And it is already happening. You see the odd announcement here and there. But we know there's lots of conversations happening behind closed doors. Yeah.
Before we go, is there anything else you would like to add?
Not really. I mean, I would just say to anyone sort of from the traditional world looking at this,
Mm-hmm.
there is some crazy yield you can get for very low risk in this space. We're trying to bring out a solidly regulated product that we just build into our system that you can earn multiple percent yield off your normal cash deposit. And that really, without being just a plug, is just an example of sort of one of the benefits that crypto can give. So rather than giving money to a hedge fund, you can keep your money in your bank account, earn multiple percent a year on it. So yeah, just watch this space.
Thank you, Ben. I really appreciate it. And again, thank you for being part of the Bellringer. And I look forward to seeing you in real life, hopefully soon.
Definitely. Thanks so much, Stacey.
Okay, bye.
Bye.